We have trading times and section. We have Sydney, Tokyo, London, New York. These names are gotten from the countries. Like example, London section is United Kingdom, Sydney, Australia, and Tokyo, Asian region. And New York is for the Americas. So what it means that the banks in those countries open at a specific time and close at a specific time. For example, most banks open 8 a.m. their local time and close 4 p.m. their local time. That is about 8 hours of work period. And when you check each trading section, it's about 8 or 9 hours. So section mean the time the banks in different countries open for business. So you can have different sections for different countries. This is for Nigerian zone. We also have for other zones. So if you live especially in Africa, you see that most banks open by 8 and they close by around 4, which is 1, 2, 3, 4 or 5. So most Africans trade this section. Now there's something you have to know. This is the London section. The London section is on and the New York section opens. So between this period, we have two sections open at the same time. This is a good time to trade because the market is volatile. Transactions are going on, the market is moving, the chart will also expected to move. So when section overlap, that is a very good time to trade. So the same way, best time to trade if you're in Africa or Nigeria is between 8 a.m. and 5 p.m. Now, Forex market analysis. Before we click sell or buy or do anything in the market, we have to analyze the market using these 3 basic analysis: technical, fundamental, sentimental. Fundamental means something like GDP, interest rate, non-farm payroll, like how many jobs are created. These are economic news which has a calendar so that we can check when such news is going to be released. For example, here is example of an economic calendar. Here we're going to check the news and the time is going to be released. So here we have a high impact news, medium impact news, and low impact news. What it means that once these news are released at the given time, the forex market tends to adjust depend on the outcome of the news. So the fundamental analysis is using the outcome of the news to trade the forex market. Like this non-farm payroll is one news that comes out every first Friday of every month. Traders wait for that time because the market moves a great deal during the time the news is released. So what they do, they will wait and see the outcome of the market. If the market is good for the currency they want to trade, they either buy or sell. It doesn't matter, but they have to wait for the news to be released. Then whatever is the outcome of the news, for example, if the news is good, that means that currency is strong. Then if the news is bad, then and they will take action based on the outcome of the forecast and the actual. So that is what you have to know about fundamental. It means trading the forex market using the news. So the next one is the technical analysis. This is where most traders fall in because the news don't come out every day and every time. So if you're using things like trend line, indicators such as moving average, stochastic, RSI, ATX, whatever indicators you're using, if that's what you use to trade, you are a technical trader. If you use support and resistance, if anytime you analyze the market using the chart, you are basically doing technical analysis. So in technical analysis, you're dealing with indicators, support, resistance, candlestick pattern, Fibonacci ratios, RSI, stochastic, and more. These are all indicators. So this is basically when you see traders plot on their chart. They are usually what we call technical analysts. To share with you an example, there's a chart in the next slide which has a 200 period moving average and a black line with support and resistance. You don't have to know everything like fundamental, technical, or sentimental, but rather pick that few tools that resonate the most with you and be profitable from it. You have to choose which one you want to specialize in. But if you can specialize in all of them, it's still good for you. In this chart, here is a resistance line, and here is a support line. Here is a moving average. So if you are that trader that mark your chart this way, then you are not using fundamental, but you're using technical to analyze the market. That is what it means. It's not something that is very serious. Then the last of them, which is the sentimental analyst, what they do is that they collect data from individuals who are already into the trade. So this is a widely popular form of analysis. So when you try to see what other traders are doing, the currency pair they are trading, for example, euro, you want to trade euro USD, then you log into a site that tracks the activity of most traders and see how many percent of those traders are long and how many percentage of those traders are shorting that pair. There you will make your choice on which one to go with. So let's assume that overwhelming number of traders and investors are bullish in the euro. They are buying the euro. They think the euro is going higher. So people vote with their trades. You can access through some sites such as Daily FX. Euro USD sentiment show most traders are buyers in the currency pair. So this is using what people are doing to be the basis of your own analysis. Let's say a trade is going 70% are buying, 30 are selling. You can decide to go with 70%, thereby by buying that market. When you do that, you are using sentimental analysis. Does Forex trade on weekends? No. Forex market stops on Friday around 11 p.m. and they open on Sunday around the same time, 11 p.m. So the first market closes on Friday night, could be 10, 11, in this case UK time, and does not open again until 9 p.m. UK time on Sunday evening. But there's something you have to know. This market is only closed for retail traders, not for central bank and related organizations. So the big boys are not out of the market. It's we, the retail traders, that are out of the market. So the forex trading actually does takes place over the weekend. So this means that there can be a difference in price between Friday close and Sunday open. That is usually known as a gap. So you can see that though the brokers made individuals like me and you to partake in the business of forex trading, but we have some limitations. We are not allowed to partake on weekends, but the big boys are always there, to take part in the trade.